Let's talk about today's live stream sponsor, ProfitX. ProfitX allows traders to get up to 1.2 million in simulated capital for their trading. But on this simulated trading capital, you get an 80% profit share of the simulated profits. That's real money on simulated accounts. They also offer unlimited trading days to their traders, so there's no kind of number of trades you can or can't place during the duration of your challenge. They also allow their traders to trade 800 plus assets, so you can pretty much trade anything with this one prop firm. When we look into sponsors for this show, we do also make sure that the team behind the scenes seems as professional as possible. This is a big team, not a kind of influencer or solo run ship. This is a professional team running ProfitX, so I want to encourage you, check them out, do your own due diligence, and see if this is the right firm for you. Now back to the stream.
All right, everybody, welcome back to another live stream. Hope you're doing well and happy second stream of the year. I'm actually back in the studio today. Got to get the hair and lighting going here today. Hope you're doing well. And it's actually really good to be back in the office. A lot, you know, I love working from home. I do need to kind of better sort out my home office situation. And it's just nice to have, I don't want to, you know, jinx it, knock on wood, but the internet here has been very, very much better than my home satellite internet. Still got to sort that out, but we're here today. Hope you're doing well. And just wanted to talk a little markets with you guys as always. And I also wanted to share with you all something that we're working on behind the scenes. And I wanted to get you guys' feedback because it quite literally is all about you guys' feedback when it comes to what we're working on. So we're working on something behind the scenes, and we're calling it the Community Market Sentiment Indicator. Okay, we're really, well, at least I'm really excited. I hope you guys are excited by this concept too. What we're going to do is we're going to make it so that you guys, the viewers, myself, our Discord, our Telegram channel, our website, we have a lot of people who watch this content as well as who are just in our trading, you know, circles. We have 40,000 people on Telegram. We have 40,000 people subscribed to our newsletter or email newsletter. We have people who watch my YouTube channel, the A1 Trading YouTube channel, Twitter. We have all these places. And I had a thought the other day about how cool would it be if we could build our own sentiment indicators based on our community? I think it'd be pretty cool. So anyways, I am working on currently building a way for you guys, the audience, to cast your vote on certain assets. Like, for example, we could ask the question in the audience, you know, are you feeling bullish or bearish on gold in the next 7 days? And we could ask that and drop it all in the chat, and that's cool for that one time. But what if we had an automated system that all the time allowed people to cast their vote about the next 7 days? How are you feeling about gold? And that regular input of data could be visible on our website. So at A1 Trading, we've got some really cool stuff coming in 2025. And the best part about this is that I'm going to try and make this to be a completely free tool to the community. So what that means is that everybody can view and vote for community sentiment. So for example, if we're asking the audience, are you bullish or bearish on gold, right? If we just all drop that in the chat, that's cool for that one time. But what if you want to look at it every day? What if you want to see what people are thinking, feeling about gold every single day of the week? So I'm going to work on that behind the scenes with the team. And we may incorporate it somehow, integrate it into the show so that we can consistently funnel people's sentiment. Because that's the thing about sentiment. Sentiment is only good if you get some volume behind it. So can I ask you guys a question in the audience? Is that something that you're like, that's cool? Like I would regularly vote. I would regularly contribute. Can you just type yes in the chat? Give me a feel. If that is an indicator that you think would be cool and useful, type yes in the chat. If it is, you know, everything that I do here and our team here, we do for the audience. We only have this platform. We only have the opportunity to get in front of all these people because our best strategy is to try and go in the direction of what the people want. So if more free tools and more stuff makes us stand out and makes you guys watch us rather than someone else, hey, that's what it's all about. Okay, cool. There's a lot of yeses. In that case, we'll get that built. So what I'm thinking, okay, so here's what I'm thinking about this. When I talk about market sentiment, you can ask the question, are you feeling a lot of these, sentiment things are 30 days, 60 days, 90 days. I'm thinking about making a little bit more oriented to the trader. So I'm thinking 7 days. Now you might say, well, I want next 30 minutes, but that's not really feasible when you actually think about data collection. You need a constant flow of people leaving feedback. And for sentiment on our scale, we are going to do, I think, 7 days out. So how are you feeling about gold in the next 7 days? How are you feeling about the euro next 7 days? How are you feeling about the S&P 500 next 7 days? And if you contribute to the polling, you then can see the community responses. Does that sound fair? Hopefully it does. I'm excited for it. I think it's a cool indicator. How does that benefit from us? Well, the big thing is we'll collect your email, and we get to collect your email. We get to put you on our email newsletter. And what that does is we can share more free content with you and potentially sell you a product down the line. There's the full marketing strategy. I got nothing to hide here. You watch our show. Yes, we're here to sell you some good tools and help you improve your trading. It is a mutually beneficial thing, and both can be accomplished at the same time. What happened to the giveaway? We gave away a stock box and an edge finder on Christmas Day. We had our 2 winners selected and contacted, and we'll probably do more. Giveaways sometime this year. So stick around for that. Love the transparency. Thanks, Alan. I mean, I got nothing to hide. There's always an incentive. These shows are not out of the goodness of our hearts. I mean, I love the trading community. I want to improve the trading community, but I'm a capitalist through and through, right? I'm here to make money in multiple ways, and I'll never hide that fact from you. So with that said, let's talk about money. Let's talk about what the NASDAQ's doing, up 0.5%, S&P's up 0.4%, Dow Jones up about 0.4%, and the Russell's up 0.6%. Another good day for the Russell so far. Yesterday was looking okay for the Russell. And, if we take a look at where's my positioning here, stock market opens up in just a few minutes. I have a couple options trades that I'm really curious about. So I actually sold puts on the Russell and sold the 211 puts. Could not have gotten better on the timing. I wish more of my trades were this kind of timing, but literally see this candle right here. If I zoom in, this candle, I shorted puts pretty close to the low of this candle. And what that meant is that this options contract very quickly lost a lot of value. So I shorted puts at 211 and market bounced. My timing, like I said, they're not always this good, but I wish I could have more trades that timed like this. Second I entered that trade, market reversed course, went back up a little bit, and that puts has lost a lot of value, unrealized gains. Now, of course, the contract still goes out to the 31st of January. Look, I like the Russell for 2025. I like the Russell in 2024. It wasn't the best call, but I do still think that the Russell has the potential to see a recovery move. In fact, I'll go out on a whim and say that I actually think that this year, the Russell, in my opinion, has more upside potential than the other 3 major indices. I think that the Russell has more upside than the NASDAQ, than the Dow, and the S&P 500. Now, that is actually a very contrarian view to market sentiment. Now, the common market idea is that most likely markets are going to move higher this year. That is consensus. That could mean that the market does the opposite, but consensus actually ends there. People think the market's going to go up, but then there's a great division amongst participants in the stock market of, is it going to be the NASDAQ that leads us again? Or is it going to be the Dow Jones? Is it going to be the S&P 500? Is it going to be the Russell? And I actually think that the Russell has a lot of upside. So I am already in a position on the Russell. I just showed you my sell put position, which is up about $637. Now, when you short puts, you are basically, it's a bullish play. So I have a bullish play on the Russell, and we'll see if that one can play out nicely. Also, for those of you guys who are interested in that sentiment indicator that I mentioned that we're working on behind the scenes, the best way to stay updated on that is to join our Telegram channel. If you're not in our Telegram, completely free to join. Chandler or James, if one of you guys could drop the link to the Telegram channel for the people, that would be awesome. Guys, make sure if you want updates on that community feedback or community sentiment indicator that I am actively going to be building today, if that is something that you'd like updates on, make sure to join our Telegram channel. We will be updating it there once we have something ready. It's probably going to take us a few days to build, but I am absolutely ecstatic to be working on that project. Something we've had the idea to do in the past, but our network has gotten to a point where we've got enough people watching the shows that we could actually, build our own kind of community sentiment indicators. I mean, we have a lot of people who watch our stuff now, which is, very humbling and exciting. So I think it'd be cool to leverage the community that we have built together here to actually build some really cool indicators about market sentiment amongst the A1 Trading Network community. So let's see what we've got here. NASDAQ up 0.7%. That's a nice little bounce back here from yesterday's sell-off. S&P 500. And, you have to ask the question, is there going to be some more choppiness like we saw yesterday? If you're watching the NASDAQ yesterday, you noticed this like I did, which was NASDAQ went whoop, whoop, whoop. I mean, it's all over the place, right? You've got NASDAQ bouncing up, bouncing down, crashing, selling, rising back up. And what I actually think that this is my best guess, is that there is some significant positioning and rebalancing occurring in the stock market. Now, let me talk to you just real quick about a phenomenon that is something that happens every January, especially a January after an incredible market return year. So if you look at the S&P 500, the NASDAQ, they had wonderful years in 2024. You made huge money even if you just bought and held. I mean, it's not every year that you get that kind of return. It's a very exceptional year, 20 something plus % on the S&P and near 30 on the NASDAQ. I mean, you had an exceptional year. Well, what happens tax-wise, and I am not a professional tax person. I'm not, I have an accountant for a reason. They know way more than I do. But here's the basics that even a simpleton like I can understand. Okay. Taxes or gains that you make in 2024 have to be paid in taxes in 2025. Gains that you make in 2025 get taxed in 2026. So if you realize gains in 2024 on your positions, you have to pay taxes in 2025. The market has kind of thought this through already, but the idea is that a lot of people hold on to their positions through the end of the year with the anticipation or the expectation that in the new year, they can either sell some of those for gains or at the very least sell and then buy other things. Let me give you a really quick example of one that I think is actually seeing some of this right now. Tesla. Okay, so if you own Tesla in 2024, oh my gosh, I am a Tesla shareholder. I'm really proud to be right now because, I mean, the thing has been a beast. So I own Tesla and Tesla went crazy. Now, if I have Tesla and I think this is kind of crazy price action and that this probably can't continue in December, right? I may still not choose to sell it because then I got to pay taxes on those gains. But if I wait until January, which is what we're seeing now, right? If you wait till January and realize that the gains there, then you get to pay taxes way later, right? That's what I think is kind of happening. So we're seeing this rebalancing where some of the really high flying names may be seeing a little bit of profit taking in January. Now, it doesn't necessarily mean, a lot of people get super bared up on that. They're like, oh my gosh, so that means we're going to see some major reversals in 2025. I actually don't think so. I actually think that the market continues to work, continues to do well, but I do think that there could be some good rotation. And rotation to me means small cap stocks. If we get some interest rate cuts this year, the Fed has signaled 2. If the labor market cools off or the economy cools off at all, the Russell may actually stand to gain as long as we don't have like impending recession. Rates coming down or inflation cooling could really help the Russell to bounce back. Russell was up only like 10% last year. Meanwhile, S&P, NASDAQ up 20+%. So I think that there's a catch-up trade here in the Russell. And, I got to call myself out. Nick, you said that was going to happen last year. And look, I'm not a genius. I don't know what's going to happen for sure. I don't know that the Russell's going to be up this year. I'm a trader. I take best guesses that I have and I risk appropriately on them. That is all a trader can do. We don't know what's going to happen. We're not forecasters. We're not perfect predictors. I may have a forecast for 2025. Doesn't mean I'm certainly going to be right about it. So for me with the Russell, we had a good year, but I think that there's much more upside. I think that we are going to confidently break these highs on the Russell. This is an easy short-term target, but my long-term target for the end of the year is a move up to 2,700 on the Russell. Now, I just put out a video yesterday. You guys might have seen this already, but I put out a video yesterday. Poor Chandler had to work on this ginormous video. It was an hour-long video, so check it out. Chandler's my video editor for those who are not aware. He put together this video yesterday, my top setups and forecasts for 2025. I like the Russell. Could be wrong about it. Could be wrong about anything. And, I like the risk to reward on the Russell. So I just wanted to share that. I do also still like the NASDAQ. So I like both. I don't think that it's, NASDAQ crashes and Russell rips. It's not necessarily what I feel or think is going to happen either. I think that both can go up, but I think that the Russell could actually outpace the others. Hopefully that's helpful to you. But that's at least my context. Don't currently have a bullish setup on the Russell. In fact, we're very neutral on the Russell. It is on the Edge Finders watch list, but going to watch closely to see if we can get some shift in this one going into this year's price action. Currently getting bullish readings on Bitcoin, which I'm already long, NASDAQ, which I'm already long, and dollar Swiss. I wish I was still long. I took profits on my dollar Swiss trade. The other thing is with the dollar index, I do see more upside for the dollar, at least right now, until something changes. U.S. economic data is coming in real solid. So let's take a look at this list here and let's remove minor currency pairs. There's pretty much your list of things that I am looking at. So if you ever want to know, I wonder what Nick thinks about certain markets, you don't even have to watch my videos. You just got to get the Edge Finder. That's the wink, wink, right? Get yourself a copy and then you can pretty much see my watch list every day. This is not something that I'm manually putting in. This is something systematically looking at sentiment indicators, technical indicators, and economic data, and generally speaking, giving us bullish and bearish biases. So I'm currently long the NASDAQ and Bitcoin. I'm looking for a possible oil long. In fact, I want to look at that in just a second. And then I'm looking at several USD crosses for bullish US dollar setups, but I got to see a pullback in the dollar. So this is pretty much, again, without even having to pull up the charts, I know what I'm looking for in the markets right now. I'm just waiting for proper technical setups, etc. Nick, please, gold. I mean, I gotta be real with you guys. Gold still looks pretty neutral to me. I do have a position on gold, but it's not what you think. It's not the kind of standard. I actually have a sell or I shorted puts on GDX, which is a gold miners ETF. So this gold miners ETF, GDX, I have a position on this one. Basically, it's at the money right now. So if this thing goes lower, of course, my sell put would be in the red and I might have to buy the shares. But, when it comes to actual XAU USD, momentum looks really, mixed right now. We had a nice little pop yesterday, but the question is, are we actually, and short term, maybe we have, if you're like a day trader, maybe we're making the move back up to 2,700 to test it, but that's not like the move that I'm looking for. With my positioning, with my trading, what I'm looking for is give me this breakout here and show me some weakness in the dollar, and then you've got my attention. But until that dollar actually rolls over, until something shows signs of materially weakening in the US and the interest rate story, I don't have my massive enthusiasm for gold. That being said, my target for gold this year is 3,000. I could be dead wrong about this. As always, I always want to preface this with, when I make a forecast like this, that is not a hard line. I believe with certainty it is going to 3,000. My base case right now, which could change considering what happens in the markets this year, if you get, if the dollar just rips higher for the whole year, gold is not going to 3,000, right? It's going to be very, very unlikely that both move up that much. If the dollar index goes slightly higher or sideways, gold could have a great year still. But there is some weight to, if the dollar just rips massively, it is going to keep some pressure on gold like it's doing right now. Dollar's really strong. It's keeping pressure on gold. But for me, on a price action basis, looking for some breakouts. But until that happens, I got stuff to do in other areas. Look at the indices. They're moving nicely overall, right? And the NASDAQ looks good. I'm long Bitcoin. Bitcoin's looking okay. So there's just other plays out there that I like a whole lot more than gold right now, which is just stuck in the mud. So until gold makes a more decisive move, again, there's nothing for me to do here on gold. So yeah, just something to think about. But again, I'll also look for gold to pop up either on the bullish side or the bearish side of this list to really give me some confirmations. By the way, if you guys want access to the Edge Finder, we do have 30-day trials available. If you would like to try out our tools, see if it's right for you. This thing comes with sentiment indicators, technical indicators, economic data, all in one platform. I now use pretty much two things all the time on my charts or in my trading view, the Edge Finder, and there's a third one, but it's more for stocks and indices, stocks and ETFs, which is the stock box. So I have these things, and this is browser based. So check this out. I go to A1 Tools. I just click stock box. There's also the Edge Finder. You saw that. And then boom, I got my stocks, the stock box, right? These are systems built by A1 Trading, my company, to help me track and find ideas in the markets based on economic data, sentiment data, etc. But I went through this in my forecast for 2025 video. Just across the board, I feel that the most likely scenario for 2025 is that risk on should, barring we don't have some, meteor hit the planet or some giant war breakout or some major slip up by the Fed. I think that the base case for me is that markets should continue to see risk on do well. Now, I say that cautiously because there's never certainty in the markets. I'm just talking about how does the weather forecast look right now? It looks, generally speaking, pretty good for markets in my personal view. Until that changes, I'm going to ride the trends that we see. Now, I'm not all in hodling, altcoins kind of risk on, but I think that there's a more likely chance that we continue to see markets do well than to really materially weaken this year. If it happens, we adjust. That's the beauty of being a trader and not just a long-term investor. As a trader, you can pivot. So if mid-year we're seeing completely different, scenario, then we can adjust. I could get cash heavy. I could look to even short some things. I could, play it intelligently. Are we buying or selling gold? Rocky, what's your strategy say? That's always I know it's kind of a cheeky, frustrating response, but genuinely, if you're asking other people like, hey, should I buy this? Hey, should I sell this? There's no system or strategy behind what you're doing. And I would urge you to be very careful because that's how a lot of people lose a lot of money, right? It's not a gut feeling thing. It's what's your system tell you? How much have you back tested that system? What's your, how are you going to manage if you're wrong? What are you going to do if you're right? Etc. But again, referencing the news. Well, nobody knows what the news is going to be before it comes out, except for, the super elites in the ivory towers that we are not, right? So ISM manufacturing PMIs, here's a better question. How do we react to these numbers, right? We don't know what they're going to be, but if you're talking about the dollar, gold, stocks, etc., the forecast is for a 48.2 print on the manufacturing PMI numbers. The way we calculate it in the Edge Finder, we track this data like we do with everything else. Manufacturing PMIs are this column right here. So manufacturing PMIs last time around were upbeat. They were better than expected. And that gave us bullish readings in that category for oil, for the dollar Swiss, right? Because US dollar, the NASDAQ as well, right? Bitcoin as an upbeat economy is generally speaking better for Bitcoin. Just brighter days are better for Bitcoin. Bitcoin's a really sensitive asset to recession, to inflation spiking, etc. So we want to see more of that. We want to see the manufacturing PMI number come out today better than expected for those assets to perform, the dollar to be strong, for stocks to do okay. Generally speaking, that is how we calculate the Edge Finder with manufacturing PMIs. Now, what is manufacturing PMIs, you might ask? Manufacturing PMI numbers are basically a survey out to the manufacturing part of our economy to the purchasing managers within the manufacturing part of the economy. It asks them questions like, do you see sale orders coming in strong in the next couple of months? Do you see, the desire to hire very strong within your company? And you survey, you aggregate all of that information together to get this PMI number. A number above 50 shows expansion in that part of the economy, and a number below 50 shows contraction. We've been in a contraction. Let's pull up. Let's understand PMIs, right? Rather than just say, hey, are we buying or selling gold, right? That is, I'm going to tell you right now, that's not how we make money in the markets, right? We can't just gut call, oh, gold's going to shoot up or shoot down, right? That's not how we do it. We look at what the data is coming out for these figures. We understand these figures. And, hey, if you get a really strong, let's say we get a 50 print on PMI numbers today, that'd be a surprise to the upside. That would be strong for the dollar. That would be strong for US economy, probably weak for gold, right? So we want to understand these things rather than just, hey, there's a red folder, right? Think about the monkey brain that this statement is. There's a red folder. Do we buy gold? Do we sell gold? And I'm not trying to pick on anyone who has felt this way, because it's pretty natural for like beginners to be like, hey, is this going to make gold go up or down? But what I'd urge you to consider is this stuff is complicated. Markets are very difficult, they're complex, and there's brilliant people who study these numbers to forecast these numbers, what they mean for the economy, what they mean on certain assets. So we want to understand the catalyst here, not just, oh, it's a red folder, price go up or down, right? That's some monkey brain stuff, right? Dave liked that one. I know I'm being a goober, but it's just re-engineering the way you think. I think it's a big pet peeve is when people just call this like, oh, it's just a red folder event. They just know like this could make the market move. I have no idea why. Let's understand why, right? Let's actually, maybe a New Year's resolution for people out there could be, let's understand all of the red folders on Forex Factory for what they actually mean and how they actually impact markets. Let's understand what that is. Who are the forecasters? Oh, Mill, that's a good question. JP Morgan, Goldman Sachs, they have entire floors of intelligent PhDs building systems to forecast this stuff. That's why markets are hard, right? Markets are difficult because you're going up against those guys. They are trading price in the direction they think it's going to go well ahead of time. So that's why markets are very difficult to try and just for the average person to come in and beat them, right? You're going up against some really smart people out there. Can you still make money in the markets? Absolutely. But it's not easy. Got to be disciplined. Got to manage risk well. And you got to understand what you're looking at. So for me, with manufacturing PMI numbers, we're looking for a number above 48.2 as a strength factor, right? Especially if you get like a 48.5, that would be a nice solid beat. 48, 0.7, right? If you get those kinds of numbers, those look good. If you get like a 48.0, 48 flat or 47.9, that would show more material weakening in the PMI numbers here. The outlook for the manufacturing part of the economy would be weaker. So we want to understand that stuff, right? What's your bias for gold PMI news today? I am very neutral on gold. I just discussed gold in depth. Basically, economic data points look pretty solid right now. COT looks economic data looks solid. That's bearish for gold from the US. At the same time, geopolitics are still a risk. Inflation's still kind of cooling overall. So I'm just very neutral on gold. I just don't really see a strong directional bias at this time. So I'm not going to trade it. There's nothing for me to do on gold. Oil prices are something that I am interested in right now. PMI numbers wise, we want to see manufacturing numbers come in higher than expected for oil to continue to hold this +1 score on the manufacturing PMI stuff. And if all this stuff is confusing to you, again, I would urge you to try out the Edge Finder for 30 days. We'll drop that link here again in the chat if you'd like to try out the tool. Again, if all this stuff, this economic data stuff sounds too heavy, right? The Edge Finder is built specifically to help simplify all of the data that we're looking at. You can pull up the manufacturing PMI data. You can also read about it down here, right? We've got information for you. We've got the forecasts relative to the actual. We explain how the scoring works in the top setups on our website. So if you're serious about your fundamentals and you're trying to get into the macro stuff to understand why markets are actually moving up or down, if that is something on your to-do list for 2025, the Edge Finder is why we are here, right? That's the tool that we've built for that purpose. Yes, we have something to sell you, but it's a wonderful tool that helps a lot of traders get better at the macro, get better at the fundamentals. I would actually argue that a lot of you guys probably don't need very much help on the technical side. It's really quite simple. In fact, like the straightforwardness of technical analysis, drawing support resistance, moving averages, like that stuff. I think I've said this before. I think you could pick that stuff up in a week. What's harder for a lot of people is like fundamentals. The reason a lot of people don't want to do them or say, oh, I don't need them, is because that's hard work, right? It's people don't want to do hard work. But if you understand why markets are moving, it's kind of like reading a book. Not that I do a whole lot of that, but when I have read books, when you're reading a book, you can oftentimes, or listening to a story or whatever, you make your analogy, you can kind of sort of take what's coming in the content, and you can forecast what might be coming next in the book, story, movie, whatever you want to refer to. You can kind of forecast what may be coming next. That's how I equate fundamental analysis to traders, is if you understand the story of the market, why it's actually moving, aka the macro, the fundamentals, you can look for possible clues as to what is most likely, not certain, but most likely to come next in the markets. Technical is not what move the markets. Fundamentals do. I totally agree. And the reason for that is, look, we're all gathered here. If technicals move the market, why are we all fixated and watching this economic statistic? It's because that's what's moving the market, the fundamentals. If you're just trading the price, which is totally fine, but my opinion, technicals lag fundamentals. Some people have the opposite view, but my opinion is fundamentals lead, technicals follow. You can still use technicals to find entries, exits, manage risk. But for me, understanding the macro, the fundamental story, gives me the forward-looking stuff that I need to try and actually make kind of ideas or plays in the market. The technicals are simply a reflection of the fundamentals coming out. And again, controversial take. Some people feel the opposite. They say, no, fundamentals are all, just a reaction to price action, justifying it. I mean, take your pick on that. But to me, I've done this for some time, and I found a lot more success studying the macro, studying fundamentals, and getting more familiar with the story of markets, and then using that to actually apply technicals and look for setups. So we take a look at oil. I like the oil bullishness on the Edge Finder. Part of the reason for this, again, thinking through the story, is that seasonally we're in an okay time for oil. At the same time, trend is to the upside, which is a technical read. But then we get into GDP stats have been really strong for the U.S. Manufacturing PMIs, we're going to see this number get challenged here today. Is that going to stay at +1 for oil, or could it go -1? Services PMI will also get that data soon. Is that going to stay the same or flip bullish? Retail sales, right? Sales volume on the retail level has been pretty solid. Inflation, employment data, right? Most of these things favor the oil market. And I think that's why oil prices are seeing a little bit of a bump here recently. For me personally, I'm looking for breaks, retests, ideas of continuing this recent uptrend. I'm not necessarily like super long-term bullish oil. In fact, I think we could see bearishness in 2025. But right now, technicals look good. Fundamentals look decent. I like the idea. So I'm looking for pullbacks in oil and going to manage risk appropriately if I get an entry. Recommend the book Day Trading the Currency Market by Kathy Lean. Yeah, Kathy actually just released a new book and she featured me into it. It was awesome. She interviewed me 2 different sessions, and I got to see a little bit of behind the scenes of what writing a book actually looks like. Guys, this is a lot of work. Bitcoin's flat on the day. You got stocks slightly higher here for the S&P. The Nasdaq's got a nice bounce back going. Russell lost a lot of steam here, actually. Look at that hourly candle. Big shoot up, came back down. Gold slightly lower here. Silver slightly higher today, up 0.8%. Silver's got a little bit of a bounce back play to it. I do have a position in SLV, another short put on SLV. we're slightly in the red on that position, even though price is above my sell put level. If some time passes, this would be in the green. So we'll see. Out to January 17th on SLV. So we'll see. TLT, how's TLT doing? TLT is a losing position for me that I'm working with. I have I have long shares and sell puts. I got assigned these 200 shares, and I have 7 contracts. I shorted 7 put contracts. Problem is, I shorted puts at 91. Price is way down at 87.8. So if I get assigned these shares, that means I have to buy them at 91. So I'm floating a losing position. So if TLT can go up, that'd be great. If it doesn't, then I'll get assigned the shares and I'll work with it and potentially dollar cost average on this one. HK50 is the Hang Seng Index, Chinese stock market. I do have a position on this one. It has gone a whole lot of nowhere for a while. I did sell calls when we shot up here, which was awesome because I was able to collect some nice premium. Market dropped back down, so the short calls actually worked out really well. I was able to do that because I traded MCHI, is the ETF that I have a current long position on. Let's take a look at the dollar index as well. See what the currencies are doing today. Dollar index up at 109. My goodness, we popped up to 109.5 here. That's crazy. Dollar index really, really strong. I would argue probably due for a pullback, but not something I'm going to short. Right? I'm not going to short the dollar. The dollar looks really solid, though I'd be interested in possible pullbacks. Maybe this 108.5 level for short-term stuff, 107.5 also looks decent. Let's take a look at some, currency crosswise, the Australian dollar, the Kiwi dollar, the pound dollar. These are possible bearish setups for me. Let's go look at those charts just to see what those kind of charts look like. Again, I can't really, I'm still waiting on some deeper retracements on the dollar pairs, but euro still looks really weak. This level looks pretty good to me. If I get my rectangle out, it's probably a 50% retracement or 61.8. Let's see. Yeah, 61.8. This looks interesting. Possible sells could be interesting on the euro if we get up into this region. Again, that would require the dollar index to probably go lower for a couple days. We'll see if we can get that set up. I do still like the downside for the euro. Yeah, I mean, I like that setup, but just going to wait for that. How can you trade euro, yen, pound, yen shorts without paying negative swaps? On a currency broker, you cannot unless you do a swap-free broker. But the thing is, if you go for a broker that doesn't charge you swaps, all you do is you pay for it in spreads and commissions. So the thing is, there's swap-free brokerages for Forex traders. And that sounds great because swaps can be expensive for swing traders. But what happens is your spreads go up a lot. So where you don't get the swap charges, again, your fees can go up. We got 30 seconds until manufacturing PMIs. Thank you guys in the chat for reminding me. Let me just switch over so we can take a look at this and roll our breaking news coming in. Manufacturing PMI numbers will drop in just about 15 seconds to go here. NASDAQ looking strong into the open. Look at that Russell completely reversed. Curious to see what happens there. With this figure, should drop any second now. Okay, so the stock slightly reacted negatively to that. Bitcoin also. Oil slightly up. Dollar index slightly up. Let's see what we got. 49.3, better than expected, both on the manufacturing PMI numbers and manufacturing prices a little bit higher. So little bit of potential inflation concerns, but also some strength in the manufacturing PMI numbers. Actually, that's quite a good beat. So yeah, that's going to keep us here on the Edge Finder. Going to keep us at a +1 here, +2 on dollar Swiss, NASDAQ +1. Bitcoin should stay intact. So a lot of these scores are going to stay intact here. These bearish readings on PMI numbers for currency crosses should remain strong to the downside, right? Favoring the US dollar, because that is, of course, a beat on manufacturing PMIs. Okay, so that should be supportive of the US dollar. So we don't see a huge move, but again, we're not seeing a big loss either. Dollar index is quite up overall. Stock market's pretty flat. You know, these numbers, the PMI numbers are, there's a lot of like ifs and buts when it comes to indices and PMI numbers. If the economy is like, if the stock market's like really scared about inflation, they don't want to see hot PMI numbers. But in most cases, they do want to see strong PMI numbers because it just shows good outlook for the economy and for company growth. If you have, services and manufacturing, purchasing managers indicating that they see strength coming for the economy. So I still like stocks long. Little bit of a pop here for the dollar. Nothing crazy. Oil continuing to look pretty solid. Bitcoin completely flat for the day. Let's go back and continue our. So euro dollar was one that I was looking at for possible short setups. Pound dollar, same story here. Looking for pullbacks with a short bias on the pound dollar. What else do we have? Pound dollar, euro dollar, Kiwi dollar, and the Australian dollar. Let's take a look at those just out of curiosity as well. Look at this. Your Australian dollar has been crazy, crazy bearish here. This has been a really, really powerful downtrend. This one it's hard for me because there's not even like, we haven't even really been able to find an area of support going back until like October, right? Found support here, but then we've just kind of trended powerfully to the downside. I don't love that chart. It's not as clear of a setup for me, just on a technical basis. Kiwi dollar, kind of same thing. I'd have to wait for like pullbacks up into regions like this and this, because this is looking a little bit more oversold than the other ones. But I do still like, I mean, this has been an incredible bearish call from the Edge Finder. Dollar bullishness in general from the Edge Finder has been very accurate. Same thing with the dollar CAD setup. Let's look at dollar CAD. Look at dollar CAD. That's been a beautiful, beautiful call. I wish I was in it. I'm not in it, but I mean, look at dollar CAD. Looks primed to just continue. We'll see if that's it could find a top here and start to reverse, but I think path of least resistance, in my personal opinion, based on the data that I see, is going to be dollar CAD looks continued bullish. Again, this thing's just been a monster uptrend. The dollar's looking so strong on a fundamental basis. Until that changes, right? Got to be kind of just acknowledging what we see. Anyways, plenty of setups on the Edge Finder. I'm loving this, right? Because sometimes you pull up the Edge Finder and it's like kind of just a barren wasteland of setups. But right now, we've got some good readings. We've got some good trends that are forming in the markets, and I'm loving it. Somebody asked a question. Nick, I want to subscribe to the VIP, but how can I get a discount? Naveed, thank you, Chandler James. There's your answer. Send us a DM. Click that link if you want discounts on the Edge Finder, Stockbox, VIP during our New Year's period here. If you're interested in discounts, please send us a direct message. We'll work with you. We also offer payment plans for the Edge Finder if that's something you're interested in. We've had a lot of people request that. We can work with you. Just send us a DM. One of the strongest things, like if you're somebody who's interested in our software tools, but you're not quite ready yet, do yourself a favor. I'm not kidding. Our support team is like, they're really great people. Send them a DM, just get to know them, get their email address, and shoot them a message when you're ready. They'll get you the best current discounts. We are always kind of running some sort of promotion at some point for our different products. If you get to know a member of our support team, they can hook you up with the best discounts that we currently have available at any time in the year. That's a little cheat code if you want to work the A1 trading system, is get to know our support team. They're wonderful. 2 out of 3 of them are in the office. Drew is on vacation, but the 2 ladies in the office, Emily and Hallie, are happy to help. Just shoot us a DM if you need payment plans, discounts on the VIP group, software, whatever you want. They'll hook you up. We got a wonderful support team behind the scenes. We also just launched the stock box, and I've got a play on stocks. I don't know that it's going to be as pretty today. Oh, it's, actually, this is looking great. I shorted calls on Apple because I saw something. I saw something that I really liked. So I shorted calls on Apple, 250 calls. Now, why did I do that? It's because I don't like the valuation on Apple. So check this out. What you're looking at is a new stock box feature. And if you're an Edgefinder user already and you don't have the stock box, if you're a stock person, you may want to consider it. We've been working overtime like crazy on this thing to get it up to speed. It's got a long ways to go, but it is currently priced very low. We do intend to raise the price over time, but the stock box is a really powerful tool for stock traders, basically. But check this out. So Apple is, of course, everybody knows what Apple is, but Apple's valuation right now is really extreme in my personal view. I think that, the Apple historically has had PEs in the mid to upper 20s, right? Now, what is a PE? It's price of the stock relative to its earnings. So the price to earnings has been mid to high 20s for Apple, right? Let's say like this is kind of like historically where it's valued. Look at where it's valued right now. It's valued up near 40. So what's the point? Well, if Apple is valued very richly, I'm not going to dispute that Apple is a remarkable company. I use their products. They're wonderful. I have nothing against Apple, but I think that the price of Apple is too high. And it doesn't mean that it can't go higher and that I could be wrong about this idea because, valuation is tricky. But here's something about Apple that I am not super impressed with. Their revenue in this period where lots of companies are growing their revenue massively has actually kind of stayed flat, right? The Apple story is obviously an incredible one over the last decades, but recently has really slowed in revenue growth, and net income is pretty unchanged. Stocks are all about like their ability to grow income, right? They're supposed, that's what a stock is supposed to be. It's supposed to be a business that's growing and income is going up, revenues going up, right? I don't love the story for Apple at these levels. I love the story for Apple. I'm not a hater of the stock. Like don't construe me in your mind as this big bearish hates Apple guy. I'm not. But I looked at this stock price ripping up like this and I said, look, in my portfolio, I have a lot of long positions, but let's hedge. So when you hedge in the market, you could do lots of different things. You could, go long something that you're short on over here or etc. Basically, one of the hedges that I put on was a short call at 250 for Apple. And I got paid a premium to do that. And it is essentially a bearish bet on Apple. That bearish bet is actually doing quite well with the recent sell-off in Apple, right? We could take a look at my sell call position, which is up nicely, right? So that's the idea, is even though I am very bullish on the markets overall, I can still pick some hedges within that, areas that I don't like as much. That is where the stock box comes in. Stock box helped me spot that idea. Now, let me be fair. I also did a play on Nike that's not starting out well. So I actually shorted. Let me also be fair. When I show you a winner, let me also show you something that's not as pretty. Nike, I shorted puts on this one, and the stock has continued to drop, meaning I could get assigned and my short puts are currently down. So why did I choose Nike? Well, the exact opposite reason for Apple. Like if we go take a look at the PE ratio of Nike, right, price to earnings, it's valued a lot less than it has been in recent years. And I think that there's a potential that you get the bounce back play in Nike in 2025. Could be wrong, could be right. But I like the odds. I like the risk to reward. So I'm shorting puts on Nike as another play that I'm watching. If you're interested in getting the stock box, let me just give you a little cheat code. If you're already an Edgefinder user or a member of our VIP group, shoot us a direct message on our website and we'll get you set up with special discounts as existing members, etc. If you're interested in supporting our new tool that we've been working on, we've been investing a lot of time and money into getting this thing up to speed. The Edgefinder has come a long way from its initial days. We're trying to do the same thing in the stock box. And by the end of the year, the stock box is going to be a beast. Just stay tuned. If you want access to the stock box and you don't have it already, shoot us a DM. We'll give you a nice subscriber discount or an existing member discount if you've in the past purchased something else from us. Nick, we need videos on how to trade stocks. When you watch my channel, I'm like super like agnostic to certain markets. Like I don't trade futures, but I pretty much trade everything else. Not that I have anything against futures, and I might trade them at some point. I just trade on a stock brokerage because I love to use options. I like ETFs. I like stocks. So that's what I trade on. That's what I'm most comfortable with. But, really fundamentals and technicals can be employed pretty much everywhere. I went down to the 1 hour chart looking for an entry on the Australian dollar. Yeah, I don't love the, it's a really powerful downtrend. If I had shorted this move, like let's just daydream for a second. Had I shorted right there, the way I trail stops, I'd probably still be in this position. So this is total hindsight, shoulda, coulda, woulda. But like had I sold here and put a stop loss here, right? This is totally just theoretical, and this is not what I did. I wish I did it. I would be in this trade most likely because what would happen is price would move down. I would take my stop loss there, right? Markets came back and retested this area, but my stop loss would have been moved to this point after we broke through these lows, right? So I would have stayed in the trade there. So this is total hindsight, shoulda, coulda, woulda. I recognize that, but this would have been a perfect trend continuation trade because when these things have like very little pullbacks, those are usually like my best trades. When I'm trailing stops on something and it barely pulls back, those are the best trades for me. Thanks, Nick and team, for your dedication and hard work. Appreciate you, man. We we had some really nice messages in the Discord group, and just from our community, giving us some love. We really appreciate you guys that watch this show. A lot of you guys, are big supporters. You hit the thumbs up button, you subscribe, you share with a friend. We really appreciate it. And 2025, we're hoping to make the stream bigger and better than ever. Waiting for a pullback on oil. Yeah, same. Absolutely strong move here on oil. Very impressive. I do have an ExxonMobil trade. Is ExxonMobil seeing love today? A little bit. ExxonMobil, I have shares long, and I have a short put that is on as well. How's XLV doing? XLV is the healthcare sector, and the healthcare sector is looking, it's been a rough couple months, but this is a contrarian trade that I have for 2025 right now. I shorted the 138 puts. So if the market goes higher, this will do quite well. And if this goes lower, I'll buy the shares at 138. came back to 72.90, but not enough, I think. For me, yeah, I think for me, I'm looking for at least a 38.2 to 50% retracement, which might mean I just got to be patient. It might also mean that I just missed the move, right? There's the possibility that this thing just, although for this to go like this, right? For oil to make that kind of move with no pullback, we probably, my educated guess would be you would have to see something geopolitical. Like, unfortunately, that would probably mean something bad is happening in the world. That's usually when oil just goes straight, right? When oil goes straight up, usually, like, let's take a look at, what was it, 2023? Let's go look at 2023, October. Where was the, well, let's just keep it simple. In 2022, when Russia invaded Ukraine, that's what I'm talking about. With geopolitical risk, oil can move absolutely straight up for way longer than you think it can. It's actually crazy. Nick, can you go into the importance of acknowledging missing the move and staying flat? It's something I struggled with when I first started out. That's great, Alan. That's a great topic. It's great because it's really important and something I still struggle with to this day. That's never easy, right? Let's say, here we are. I've been talking about this oil move, this reading on the edge finder looks good, looks bullish. But what if I'm sitting here looking at that trade and it just goes like this? And I never played it. I never got in, but I was right the whole time. Well, the answer is you missed it. And it's okay to miss something, right? Sometimes you can say like, oh man, this stock is going to look incredible, or this commodity is going to look, super bearish, or this stock, or this index, whatever you're looking at, right? Sometimes you have an opinion and you're very right, but your timing is wrong, or you just don't get a chance to move in. And it's okay. The markets are still going to be there the next day. But what the worst thing you could do is start building the wrong habits. So what I mean by that is if I go over here and I go just straight up long oil right now, I'm like, I can't stand it. It's not pulling back. I want to be in this trade so bad. Like if that's what I start doing, let's say I buy this. You know what the worst thing that could happen? You know what the worst thing that could happen is it goes up. You know why? Because what does that do to your psychology? If you bought oil right now, like let's say you're bullish, you may be bearish. I don't know what you are listening. I'm bullish on oil right now in the short term, and I'm painstakingly waiting for a pullback. So if I'm looking at oil and I'm saying, look, I'm just going to buy it. I don't care. I can't stand it. I got to get in. It's going higher. If that's what I say to myself and then I do that, what if it goes up? What if it goes up? That'd be the worst thing that could happen. You know why? Because what I just did is succumbed to my weak patience, and it rewarded me for that. And it taught my monkey brain, okay, I can chase and it works. But we know that that is a really not great idea in the long term. A lot of times when you chase, it reverses. And right here, I don't have a good stop loss point. Like if I'm looking at this chart, where do I want to put a stop? I want to put a stop below that 61.8. So am I going to risk a 4.8% move in the price of oil? Well, that may not be that crazy if your goal is to hold this for several months and your target is like 14% move in oil. But if you're someone short-term trading, which is probably most of this audience, to risk that much to make a move even just to like here is hardly a one-to-one. Let's look at it differently. Check this out. So if I'm here, and that's where I want to put stop, right? If that's my setup for oil, that's not a great risk to reward. What if I just say, look, turn your monkey brain off, Nick, and wait for a pullback. And when that thing pulls back, you don't go all in. You risk a small portion of the account and you just say, look, I like that. Look at how that just changed from a trade idea where I'm risking very little from the one before where I was risking a lot to make just about the same. So the beauty of pullbacks and the pain of pullbacks is that, the beauty is that when you get that setup, your risk to reward, even if it doesn't work, your risk to reward's a lot better in terms of like, how much are you risking on this one trade? As long as you don't size up like an idiot, right? If you just size appropriately, wait for the setup, and this could, completely not work. It could fall flat on its face, go right back down. But at least I waited and I built the right tolerance to waiting for a pullback. And then, I stopped out appropriately. Or let's say it works. The reward is so much better relative to the risk that I had to take. So the worst thing, in my opinion, you could do is chase something, because if it works out, you're going to reinforce that, I can just chase. And the next time you're going to chase with even more size. And then when it doesn't work, when it does that move, it's going to stink. So be disciplined, wait for your setups. I like oil long for now. Momentum looks really good, but I got to see the healthy retracement before I can really play anything on oil. But we'll see. I mean, that's a pretty impressive break on 73. We'll see if it can continue. Okay, guys, we got Chris Pulver coming in next. Before we break, let me just remind you guys, if you want access to the Edge Finder, to the stock box, send us a DM on our website. We'll get you hooked up with some New Year's discounts. Just send us a DM. We'll drop the link here in the chat. And Chris Pulver is up next. I got to run to the restroom. So Chris has got it from here. Thanks, guys, and stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Friday. Let me share the screen. And how's everybody doing? I'm just getting a couple trades posted in the Pulver Alert section. We have some news today. We're kicking off officially next week. It's still not going to be a full trading week because there's going to be a Jimmy Carter Memorial on Thursday the 9th. I just looked that up. I thought it was Monday, but it's going to be Thursday the 9th. So right before non-farm payroll, market's going to be closed. U.S. equities markets closed on Thursday. So we still don't have a full trading week. So it's going to be interesting to see how next week comes back in. We have non-farm payroll on Friday. And we're coming off the new year this week. So get a couple trades posted. And let me go to SPY, Symmetry, Head and Shoulders, 520 level. I like that trade. Yeah, I'm going to post this trade in here. Screenshot. So I'm looking at a little income trade on the SPY. I did an income trade on the ES, which is futures. So that's posted in my Pulver Alert section for A1 Trading Discord. Charts there. Oops, I need to put everybody in there. So give me 1 second. There it is. Okay. So nobody knows how this first little start of the year is going to go. I've been talking about this potential, hopefully it's like an orderly fall if we do fall. If it's not, and this market gets all excited to say, okay, we're going to come back in, we're going to fill this election gap, that could still offer some support. The bulls might still have some fight left in them. I'd say if we break this PCE low, it is doing a little bit of technical damage to the market, but there is this election gap that once we get filled, the market could be pseudo happy with that. That could still be symmetry. Remember, this is a high low, lower high to lower low. So if we hit that symmetry, fill that election gap, could the market offer up a bounce there? Possibly. Okay. So are we high to low, lower high to lower low, lower high to lower low? Maybe we just work our way down with some type of corrective move like that. and then we still find our 200 moving average, which I still think is a bar count that needs to be hit. We're now stretching into the 300. It's got to be close to 300 at this point. So from here to here, we're 293 bars. So because it doesn't count weekends and stuff, I mean, it doesn't matter how many days we've been apart. It's like how many trading days. So we've been 293. This is over a year, right? There's 250 roughly trading days a year, 293 bars since we hit this 200 moving average. So I could see price finding its way down to it. I could see price doing this like somewhat orderly and a little bit like of a controlled correction. I think everyone's concern is that this market just goes down fast. So the trade I'm looking at is it's an income trade that I would be willing to own the shares of the SPY, and I would own it at 512 if I'm taking assignment. So if I could say to you today, after sitting here at 609, that you'd have an opportunity to own the SPY at 512, if you have the cash to do it, would you be interested in doing it? I would say yes, which is why I took the trade. So if I don't take any assignment, I'm still going to make about $210 of profit, and I have a profit trap of potentially $710. So this is all within about 60 days. So in 60 days, I'll either have $200, $700, or I'll own, and I will repair this thing for, hopefully $3, $4, $5 a share, maybe more. Own the SPY at a really nice discount. Even consider that like, yeah, I'll hang on to it. I'll lower my cost basis. So anyway, that's the trade. So that's posted in the Pulver Alert section. I posted that under the index trades for the SPY. I also posted one in futures trades for ES. And those just got posted this morning. Okay. All right. Let's have a look at everything else top-down wise. We do have some other trades running. Futures market this morning. Here is the 930. See if there's a breakout at all today. It's been pretty choppy. And is this my 930 candle on NQ? Yep. So NQ still a little bit choppy as well. We did have some 10 a.m. news this morning. That's it. So a lot of low impact stuff. We had the manufacturing PMI come in better than expected for the U.S., which is surprising. It's still below 50. Everyone's talking about the slowdown in manufacturing. The ISM manufacturer prices. So is this an inflation reading? Level of diffusion index based on surveyed purchasing managers. Component PMI reported separately as an inflation gauge. Above 50 indicates rising prices. Hey, what do you know? It's a leading indicator for consumer inflation. When businesses pay more for goods and services, costs usually pass on the consumer. So cool. Manufacturing PMI went up, so did prices. Guess who's going to pay for that? Consumers. That's the same story we've been watching for the last 3-4 months. How's the market taking it today? So far, we're still red on the week. We did bounce off of the PCE lows. So this is the low from this was Wednesday's Fed, Thursday's chop, Friday's kind of fake out trade to the downside before we had that little Santa rally, which, by the way, today marking the official Santa rally end. This is where we started for Christmas Eve. This is where we are today. So Santa did not show up in 2024. He did until he didn't. So he somehow got lost. He needed to, use the high-tech stuff that they use in Red One. It was not that Santa this year. This Santa was a little bit more discombobulated. Is that a word? Anyway, I guess disoriented. So it looks like we're going to finish negative for the Santa rally, which would be the third time in 70 years, having back-to-back losses. 2023 was also a negative Santa rally, despite being 20+% up for the year this year, unless we get like a late day rally, which could happen, of course, but I don't know. Anyway, vulnerable to the downside if we break below the PCE lows. And below those PCE lows, like I said, there's symmetry there. Watch that gap fill from the election, that post-election rip. And is this just an orderly little correction back down to the 200? Does it get a little bit nastier to the downside? I don't know. But let's go top down. So Q is looking the same way. This hedge I closed out for profit. So that's done now. That's a clean trade. Nice little win. I didn't quite get the profit that I wanted, but it was close. So I paid $585 per contract, and I closed out for $1330. So I made $745. That's 127% return on capital, which I was pretty happy with that position considering it's a hedge. I could hold it a little bit longer, but I was already going after $1,000 profit. I closed out for about 75% of it. So I'm taking it, and that gives me 3 successful hedges. hedged on MES made money, hedged on ES made money, hedged on SPY made money. Actually, 4 hedges, hedged on QQQ made money. So that helped offset some of the drawdown that I've seen the last couple of weeks by grabbing some hedge profits. Okay, so QQQ, same type of thing. Here is the post-election. So if this is high, low, lower, high, lower, low, lower, high, lower, low, maybe this is, like I said, orderly decline coming back in to fill this election gap. So there's a little bit lower to go. We'd get to about 490 or so if this comes back into fill. And that's if it stays cooperative, right? Maybe this is, we're sitting here and then kind of flagging and then it gets worse to start things off. I don't know. But if you look left on this chart, okay, if you look left on this chart, there's still a lot of support in this index. So if we came down anywhere between this 144 and 200 moving average, I'm interested in establishing some positions here. We could come all the way back down to this level as well, which would be, doesn't necessarily have to test or threaten the August 5th low, but it would come back into, let's say 460 to 440. So I'm willing to remain a bull in those areas. All right. Now, remain a bull, but also I'll still be protecting because you never know how quick sentiment shifts. If we get down to this area, does it capitulate? Does it get worse? Does it have a dead cat bounce and then go lower? Does it actually flush out and take out this August 5th low? I don't know. So yesterday, I posted this in my trading journal. I did updates on BITO. I actually started out with Baidu. So I updated some break evens. I added in some collar trades. Right now, I have a break even around $86 on Baidu, and I'm still looking to hang on to this. My upside is 95. My protective put is 70. I'm going out to February, so that's an updated trade for me on Baidu. BITO, having some of these ownership positions on the Bitcoin exposure. This has dropped a decent amount. I'm really happy that I got out those long calls. Now I have a March 30 by 15 collar trade. So if we have a big move to the downside, it's protected. It's an out of the money put. So if price moves quickly to the downside, I'm protected. If price just works its way back up, $30 isn't quite to the all-time highs. But this one with the dividend, the dividend and the repricing that we have here on BITO, $30 might be. I mean, we might have to hit all-time highs again on Bitcoin for BITO to hit $30. So I think if anything, I'm just going to lower the cost basis. I did all these collar trades at a credit, by the way. So this one was about a 55-cent credit. And then on JD, I lowered the cost basis on this one as well. I have a 39 by 30 collar. My break even is 36.82. And if it gets called away for $39, I'm just going to make what's $2.18 per share. I'll make over $1,000 income on JD. That was another one. And then OXY, I closed out. I have a 50 by 40 collar trade in this one. We're going to see what energy does. We're going to see what oil does. If it gets called away at $50, my break even's 48.63. I'd still make $1, 37. So $1.37. I'm in 500 shares. I think I'm on my portfolio margin accounts. I have 7 of those. So make about $4,800 on OXY if it gets called away above $50. So if it has to stay here, that's just fine, but it's collared, it's protected. So if it goes down, I've got it protected to $40 out to February. If it goes up, it gets called away above 50. That's fine. I'll keep the income. But just wanted to add some protection plays. Let's have a look at China. China is up. China's up a little bit. HSI is positive. Alibaba, man, I mean, not anything super exciting. So we had a slight gap higher today, which is why we're showing some green. But I have reduced a lot of my exposure. I still have shares of Alibaba. I still have shares of Baidu. I'm out of FXI for profit, out of KWeb for profit. I still have shares of JD, SCHD, SCHG. I do have some exposure in both of these. The advanced decline, let's talk about this for a second. Let's look at the stocks. Yeah, this is good. This would be a pretty interesting buy-in indicator. This is the S&P stocks above the 50-day moving average. Right now, we only have about 17%, 17.89% of stocks above their 50-day moving average. Okay. Now, going back historically, this has coincided with a lot of bottoms in the market. So did I put... I guess I wrote that. I was like, oh, I did label it. But anyway, I labeled it right there. So, going back into what's the timestamp here? September 2023, we had a nice little bottom in September, October 2023. Go back into September, October, excuse me, 2022. Nice little bottom in there. So anytime that this indicator of the 500 stocks in the S&P that are basically showing that most of them are all below the 50 moving average, that to me is it's a bit of a contrarian play, but it's coincided really nicely with some timing in the market. So in a way, I kind of hope that we go a little bit lower. We put a little bit more pressure on the underperformance of the market breadth, and then we see if we have a chance to scoop up a dip. So that's one way to kind of time the S&P a little bit. And I found the same indicator, the 50-day moving average on the NASDAQ, which right now we have about 27.7% of stocks above the 50-day. Same type of thing here. If we come back into, if we're in, let's say 11 or less, I would say 11 or lower, probably a timing indicator for the NASDAQ. But difference is, it's not 500 stocks. This is only 100 stocks. And so with the Mag 7 still performing well, those are the, let's say the top 7, the top 8, the top 10 stocks that have performed pretty well carrying the market most of this year, consistently at least. And then we had a couple of spurts of market breadth. But if we get down to like 11 or less, that's another timing indicator for the NASDAQ. Okay, added in some sectors. I talked about these yesterday. I did take a trade on XLC. So communication services sector, I put in a 1-1-1 trade. So the income is $55. I did 2 contracts. So it's $110 if I don't get any assignment, but I'm willing to also take on the assignment for the sector in XLC. I looked at XLK, which is tech, but it's a $234 sector. Not that interested in it, unless it is a little bit more attractive price-wise. So does it come back down to 220? Does it come down any lower than that? Yes, no, maybe. But sector-wise, like, I don't love the price on this one, so I wasn't really willing to put the assignment in. But anyway, we are, on the decline for communication services. We're down on consumer discretionary. This is probably going to be the most strained. I think this would be one of the most strained sectors this year. I think the consumer is going to run out of money. I'm not talking like breaking the bank. I just think that consumers are going to have to get a little bit more budget friendly and stop funding their life with debt and stop living on credit cards. The amount of delinquencies have gone up. The amount of canceled contracts and housing has gone up. There's just all sorts of dynamics we talked about a little bit yesterday. So I wonder if the consumer discretionary can also be carried by like the top 10% of income earners. It can be carried by the top 1% of income earners. We all know that the wealth gap continues to grow. The disparity in this country gets worse and worse and worse, as it does most places. But if the 1% start to scale back, that will trickle down probably a lot heavier than the bottom, 99%. But still, consumer discretionary, if you don't need stuff, you're probably not buying stuff. If you want to budget and your New Year's resolution was, I need to save more than I spend. Well, this is probably a sector that I wouldn't really want to be in unless it's heavily discounted. So if this were to come back down, let's say 18% correction, I'm a little bit more interested in it. How ugly can it get? Well, we had a correction here back in 2022 where this thing went down 41%. It actually was more volatile than the index. So keep that in mind. Like, even though this looks like an attractive spot to pick up a level, these are probably going to be more volatile than the indexes themselves. So if you want to trade and have like the least amount of volatility, I do think you stick with the SPY, you stick with the QQQ, you stick with the SPX, NDX, you stick with the indexes that are, essentially play in the haystack. Right. So anyway, we'll keep an eye on that one. XLP, this is consumer staples. This is stuff that you need. Right now, technically speaking, where do I want this one to go? Well, if it came back down into this area, way more interested in this area. Is it going to happen? I have no idea. But if it falls, yeah, I'm interested in maybe scooping this one up on the discount. But probably not a good sign for this to be like a broadening pattern. If it came all the way back down here to like $70 or even low 60s, I think that's a good opportunity to buy it. But that's a long ways to fall. So I'd wait on that one. Energy sector had a nice bounce, probably range bound on this one. If anybody bought XLE, I don't know if Nick put in like a sell put on this one, cash secured put, which isn't too bad. Energy is going to be a big part of the inflation story in 2025. We look at oil. Oil is just still getting hammered back and forth between these really tight prices, right? Oil is 73.69. That's a bit of a squeeze on oil. Okay, what was the reading? Oil futures on track for solid weekly gains. Energy stocks advance. Oil falls on China. Well, that's 2 hours ago. Oil doesn't look like it's fallen when we got 1, 2, 3, 4, 5 days in a row. Now, I've said this the last probably 3-4 weeks. I don't know if oil has what it takes to make a convincing break above this 200 moving average. We can pop up here, have a little bit of a squeeze, and then quickly fade back down, and we come back down to the lows again. So this is what I'm noticing has been the trend the last several months. Now, if we get a convincing break, I would say we probably have to get above like $75 or $76. If we get a convincing break and we pause here and we go higher, then again, more concerned about inflation. So that'd be higher inflation. That would be probably putting pressure on the equities market to maybe show some breaking below that PCE low and this week's low, maybe coming back to retest that election gap. That would also be putting pressure on probably the bond yields. Okay. If oil's expensive, wouldn't stuff based around an increase in price? Yep. That's an inflationary game. If oil's up, I mean, that makes energy prices higher. That's going to be sticky inflation again. And, look, we have seen higher inflation readings since September with oil prices going nowhere. So if oil's going up, that adds to the potential issue, right? I don't think this inflation thing is going to be easy. In fact, it's far from it. So, we talked about it yesterday. It's like, does the Fed pivot hard this year and have to raise rates? That would be not what the market wants to see. And that would still put the 10-year yield, which is probably showing green today. Yep, another 0.35%. So it's like this 10-year yield is not showing any signs of stopping. I wouldn't be surprised if we're having this conversation in the next 3 to 6 months. We've already, made this little rally up towards 5+%. So it's concerning because the last time we rallied up that hard, we did see a break in the markets. Like as this was going higher, the stock market was falling hard. Okay. So as this was going higher, the stock market was falling hard. It topped out here. We actually saw a bottom, interestingly enough, a bottom in the stock market when this thing topped out. So, we're only like 4 to 5% away from all-time highs. So if this goes higher, this could easily climb to like, 7%, 8%, 10% corrections in the market. It could get uglier too, but you got to watch it. Okay. All right, Daniel, good stuff, man. All right, that's the 10-year. Let's go gold and silver as well. So we've got the indexes. Russell, I'm not really touching the Russell. The Dow maybe finding some support here with the election fill. So we have the election fill, maybe a little bit of stability in here. But I'd like to see it just drift a little bit lower, offer the Dow a trade in there. So I might look at a trade if we do come back into this 144 to 200 moving average. I may look at an income trade, either a credit spread or some type of like 111 in the index, where I can take a low risk assignment and a high probability income trade. But I want to see if the IV is a little bit higher, which it should be. It's probably up in the 20s if I go DIA. We're at a 28.2 IV rank, so we get a little bit more premium out of this one, which isn't bad. So I'll keep an eye on that. Russell, probably not touching that one too much. Like I said, volatility index, slightly elevated volatility. 15 is pretty good. Like that's decent, reasonable volatility. The one thing to remember for 2024 is we had 2 of the largest single-day VIX moves ever, which is kind of crazy. So do we have 2025 with elevated volatility, but not this like, outlier VIX move? Do we have like a 2022 repeat where we were going from like 20 to 35? I don't know. The VIX is always a interesting instrument. I would be long volatility in here, right? And I would be basically looking to revert volatility anywhere above 30. Yeah, dollar's probably going to be the winner there, Jonathan. I think that I've said it for the last several months. I mean, since we had that squeeze on the dollar and we didn't stop, it's like the dollar's probably going to be the strongest play moving forward. I mean, and the crappy part is it already feels like, well, I missed the move. Well, you did. You kind of missed this squeeze. You kind of missed the add-on trade. You missed the sweep of these highs. I mean, I think that if the dollar does not turn aggressively here, that this dollar is going to be in open space to buy the dips and trying to go after these highs here. I really think the dollar can make its run to 114.15. I still don't want to call the top on the dollar, but I'm way more interested in like a larger macro sell on the dollar. Okay. And again, if the dollar gets stronger, it's going to be, really disruptive for the Forex market because we're going to see some really stubborn, irrational trends. And also we're going to see some, I mean, we'll see like 1,000 to 1,500 pip moves. We'll see 2,000 pip moves from high to low or low to high. Like it'll be a huge move, right? So how's my dollar CAD? It's getting closer. Come on, dollar CAD, you can get there. So I'm only about 30 pips away from my profit target, and my dollar Swiss, I'm about 100 pips away from my profit target. So looking to close in on those for some profit. Aussie dollar, I'm still keeping it very small. The dollar cost average into this one. New Zealand dollar, still looking at dollar cost average into this one. Euro dollar, still making fresh lows. This is a trade that if you fade, if this pulls back, look for a trend line break, look to fade euro dollar. I think this is going to parity. So, if you want to get into the smaller time frames, just watch the higher time frames because we could have like a pullback here. We could run some levels but then fade. But I think parity is probably going to happen. We already hit it back in 2022. We could go through parity by, several hundred pips. I'd be willing to take the trade off of that or lower, but I think until then, if we get any type of pullbacks here, I think this structure low would be a good spot to look to sell. Trade there, pulls back again, trade there, stop loss kind of above this 105, 106 zone, get myself a little bit of wiggle room to get some entries and then see if this dollar continues to go lower. So euro dollar goes lower, dollar gets stronger, and just stay with this overall trend. Okay, New Zealand, Swiss, all the Swiss pairs I'm still holding long. That's still my trade. I'm still long. So I'm holding long. It's positive swap. It's obviously technically needs a little bit of work. Hopefully this is going to, if this is like push down, pull back, push down, pull back, push down, there's a potential bottoming right there with that flash crash low from August 5th. I would look at that as a strong support level to kind of work its way back up into the center high. That would be that's like the exact same trade as dollar Swiss. The difference is dollar Swiss is now, after hitting this low, dollar Swiss is almost back up to the same high. So dollar Swiss is almost to my profit target. New Zealand Swiss, if this heads down a little bit lower towards this flash crash bottom, if we hit that level, I would love to add more positions on my New Zealand Swiss, which I already have positions in. I did a lot of averaging in here, and I did a lot of averaging in on, let's see, I did a lot of averaging in, trying to think where. As this was falling, averaged in, averaged in, averaged in. We had our flash crash low, had some profit, didn't take any profit on that, waiting for a trend line to break, waiting for a trend line to break. So I'm just dollar cost averaging in. But point is, if we come back down to revisit this level, this would be the center high that I want to go after. So if I can stack some more trades over here, so I'd want to wait for price to come back and find this low and then stack some buy stop orders. And if price goes up, that's my profit target. So I can turn most of these trades into profit. Not all of them, but most of them. I was trying to go after 6,000 when I started this positioning. So I had an equal low there, had a trend line break there, started to stack in some orders. So I've taken this thing up for some profit, but unfortunately didn't take a lot of profit. And then I got back in at this low, flash crash, and then on this trend line break, I'm still kind of waiting. Okay. So if we end up getting more trades, I'll add in over here and start stacking back in towards 53.50. There's a measure move. We can get all the way back to like 56, but patience on the trade. For me, patience. Okay. Yen pairs. I think if you've heard me in the last 10 years of trading, 15 years of trading Forex, and probably 10 years of teaching others, you'll probably hear me say I don't like the yen at all. So I'm not trading the yen. I don't care what the yen does. I don't care what the Japanese yen does. I don't care what the Bank of Japan does. I don't care what the dollar yen does. I think the yen is the silliest currency pair to trade unless you're following what you see. So stick with a direction, stick with the 4 hour, 1 hour alignments, trade what you see. Don't fight the flow of the yen. Don't be a hero. Don't call the top. I have no idea what the yen wants to do. Okay, right now, okay, euro yen, it's just a giant range. We had that huge disruptive move from high to low, and I could see this still being a huge channel. So is there a channel in here to trade? Yes, no, maybe. Okay, that is not going to be fun or pleasant. I'm not going to take the trade. I said this for the last probably 3 months. The only way I'm going to trade Japanese yen is through the Japanese yen futures, because I can do define risk, not get my stop losses hunted, not play with interventions from the Bank of Japan, and just put in a risk that's hopefully favorable reward to risk. So 6J is going to be the way that I trade it. Okay. And what I'm wanting to see is, will this come back down to a level that is a kind of no-brainer risk-defined trade? Yes, no, maybe. So I will probably go out as far as I can in the Japanese yen futures contracts. I did this where I can get about 125 to 150% return on capital. So I get a little asymmetry to the defined risk side. If it goes through it, then I just risk defined. It's like I'm risking $250 to make $350 per contract. So would I step it up to make, $550 a risk to make $750 to $800 a profit? Yeah, that's about my wheelhouse. Okay. All right. I don't have a stop loss, Rafal. I don't have a stop loss in New Zealand dollar. I'm trading small, and I'm willing to scale into this one down to, I don't think it should go too much lower than 5,500. It shouldn't go too much lower than that. But if we have like dollar strength continuing, I'm in 3 small positions right here. Okay. If this goes lower, I'm already committed to this. I'm going to do a 5,300 and a 5,000. I'll take a 4th and a 5th entry right here. Drawdown wise will probably be, I don't know, maybe a 1 to 2% drawdown. And if I can get this thing, and I don't know if it's going to hit 5,000, but if it does, and I'm in a 1 or 2% drawdown, okay, I can manage the drawdown and then stack my way back up, get these, buy stop levels to get filled, come back to this support, which I firmly believe will get hit, and turn, I could do this. I could take, this trade could be break even. This trade could be a loss. This could be a loss. And I can stack up winner here, and then stack up like 3 to 5 more winners here, right? A bunch of winning trades there. So I can eat these positions and say, okay, I'll take a small loss there, but work my cost basis lower, and maybe get my break even from like 5,300 or 5,250 back up to 56. Take 300 to 400 pips net on the profit trade, but I'm willing to ride this thing down to 5,000. And I know when I say that, everyone's just like, that's crazy. Where's the stop loss at? That's way too much risk. I can never afford to do that. You're probably right. You probably can't, because you probably trade too big. So this is how I trade Forex. I trade really, really small. I give myself wide open spaces to work with. And then when I believe and I see that price is working in my favor, I see bottoming patterns, I see confirmations, then I put a lot more positions in the direction that price is going. Is that a martingale? No. Martingale is a stupid strategy, because all you're going to do is keep doubling in until you lose everything. So that's a stupid strategy. It's scaling in. Okay. And how do I scale in? With like 1 unit different in price size. So it's, 10 cents a pip, 10 cents a pip, but it's a unit different. So the broker recognizes it with non-FIFO, and I'll trade, micro lots until it adds up to a couple of dollars, and mini lots until I trade a, half a standard lot or standard lot, and I build it up. So, eventually I'm trading for $5 or $10 a pip, make 200 to 300 pips net, and it ends up making a couple $1,000. So I do that a lot. And if I get, 10 trades like that for the year, and I can make, $30,000, $40,000 in Forex trading safely, I do that almost every single year. My bigger trades, when I really like a trade, I generally can make, 20, 30, 40,000 pips. And it adds up to be, my biggest year in Forex. I mean, I've made, I don't know, I'm trying to think, for all my managed accounts in Forex, I think I made close to like $2 million in a year in Forex trading like this. And I do a lot of this on probably less than a dozen trades a year. So if I find a trade I really like, I do spend a lot of time nurturing these positions, but I just give myself a lot of space. Okay. I can afford to let the market go against me. I don't want it to, right? But I can afford to trade small and manage my risk. Do I stop out of these trades ever? Yes, but I don't stop out of the entire position. If this went down against me a bunch, then I just close out the worst position and then just re-enter. So I'm willing to take losses along the way if things get really nasty, because it's silly to hang on to a trade. If I'm down, 500 pips on a trade or 1,000 pips on a single entry, I shouldn't be in that trade. I should get out of that trade. So I do take losses. But when I give myself open spaces and bigger time frames, I usually can work these areas where it doesn't have to stop me out. So anyways, that makes sense. And again, I know if I say that, it could be just, I don't know, people, I've seen like the look of confusion, number one, and just like nobody really gets it. So it's a hard strategy to teach, okay? But it is the most success that I found in the Forex market. Okay, I don't have to look at charts every day. I don't have to sit and care about non-farm payroll. I don't care about any news in the Forex market. I really don't care about the fundamentals either, right? Forex to me is a pure technical market. So you trade the technicals, right? It's amazing how fundamentals fall in line and prices start to go your way. And like all of a sudden the news is all of a sudden supporting the direction the market's going. It's almost as pure technical as you can get. So that's what I trade, and the way that I take it to higher time frames, it's yeah, with the higher time frames, I just have less noise, right? So overall risk, yeah, I mean generally, I'm willing to take on a certain pair. It's like I'm willing to accept like 3%, 4%, 5% drawdown on some. But in order to accept that risk, I do want to make sure that my reward is bigger. So if I'm accepting a 3 to 4% drawdown or 5% drawdown, I expect to have the trade when it's all said and done to hopefully pay me, 7, 8 to 10%. I want my reward to be bigger. I just have to be patient enough to, number one, not trade too large up front. Number two, continue to, work the positions the way that I want to like scale in, not scale in. And I'll say this, I'll make this really simple. Okay. There's two ways the market works. If I'm looking at this market as, okay, this is in a downtrend. Well, if it's in a downtrend and I'm trading the downtrend, great. But if it's in a downtrend that I'm like, I'm already late to the game, I'm not going to chase this thing, I'd be selling it low. I don't want to sell low. So what I do instead is I look at it this way. If this is in a downtrend and it's coming into support, what I do is I'm looking at like, okay, I'll start a trade here, and this would be an anticipation trade. Okay. So what I might do is I might start putting in 1 or 2 anticipation trades. And then what I'm going to wait for is hopefully a trend line break or some type of price pattern. Okay. And then I start to look at adding confirmation trades. That's really what I do. So I'm willing to start really small with anticipation trades, and I start to scale back in with confidence that price can go my way on price patterns and confirmation. Then I start getting the trend lines to break. Then I start getting the oversold conditions with diversions. Then I start looking at a little bit more, okay, right side of the trend line. So if I build small here, add consistently here, and let's say my profit target is back here. Okay, so what do? Well, I manage my drawdown here. So this is where I'm down. I'll put this in red, I guess. So I manage my drawdown in these small anticipation trades, and then I add to my confirmation trades. Does that make sense? So anticipation trades, I trade small for this reason. I don't know where the bottom is. Okay. Confucius say those who, pick bottoms wake up with smelly fingers. So I get it. I got to trade small so I don't get into too much trouble. But once these anticipation trades start to pay out and confirmation trades are also going my way, and this is my profit target, well, these turn into winning trades, and all these turn into winning trades, and I make money. And as long as I keep this side small, I don't get into too much trouble. I keep the drawdown manageable, right? Let's say 1 to 5%, and then I turn the positive side, let's say, 7 to 10%. That works really well. But it's all about this side of the trade. If I'm going to start early, I got to start small, you know? And the argument is, well, Chris, why don't you just not trade any anticipation trades, wait for confirmation? Well, because if I miss the order or I don't start dollar cost averaging in, early enough, like I might miss the actual entry, or I'm getting in later. So I just because that's like I still see the structure. If the market's going to bounce off support, I want to be in at support, as opposed to it's already bounced off support and it's trading a wave 3 that I missed. So anyway, that's just a bunch of drawing, but you get it, right? All right. EETH is the one that I'm in for Ethereum. That's what I've been using. We're back up to $70. Bitcoin's back up to 97. Oh, big run on old Bitcoin. Cool. Okay. All right. We're good on the Forex stuff for right now. That's where I'm at. That's how I trade it. That is 17 years of trading Forex in 20 minutes. Does it work? It is the most consistent way that I made money in Forex every year. Does it Does it pay me every month? No, it pays me in a 12-month span. I typically make some really big profits in, let's say 5 to 10 trades over the course of a year. I never like to be forced to take a trade in Forex because if it's not a good setup, I don't want to touch it. So, do I like the dollar stuff? Yeah, I like the dollar. And eventually, the dollar is going to be a great trade, right? Right now, the dollar's already been, if you're long the dollar, you're freaking killing it right now. Okay. I'm long dollar CAD, I'm long dollar Swiss. I'm crushing those trades. We're going to make a lot of money on those trades. That's great. I'm long Aussie dollar, New Zealand dollar, and I'm early. I know that I'm early. Okay. But I'm willing to ride those trades out a little bit longer. I'm willing to see, you know what? I think the dollar wants to get a little bit stronger here. Then the trade I'm looking at here is probably short, or I should say long euro dollar. If this trade reverses, I'm going to get long euro dollar probably pretty heavy. Again, anticipating and then confirming, and then maybe taking a trade on euro dollar that's like, 100 down to 98 down to 96 and take it all the way back to 104 105. But I don't want to sell the euro dollar now because it's already at like 102.80, 10300. I'm not that interested in riding this last little stretch down to parity or maybe a little bit lower than parity. I'd rather let the dollar get so overbought and so extreme that it becomes a macro trade that I can follow. And I can make a lot of money on that. Okay. All right. So dollar index, don't fight it. Japanese yen, don't fight it. I'm trading futures. I'll wait for my dollar crosses. Let's go gold, silver. We did oil. If oil makes a convincing break, you got to watch this level. We've been rejected by the 200 moving average a lot the last couple of months. And so, I would say that oil has made a nice little 4-day rally, but it did that before where we had this like 4-day rally, then this gets faded, 4 or 5-day rally gets faded, same type of thing here. So if this gets faded hard, then it's right back where we started. Okay, I don't think there's, a support level here that's going to be breaking hard unless it's a fake out. Something tells me that oil prices are, to me, the probability is higher probability of going higher than lower. I think if anything, this would be a bear trap scenario, and I think oil breaks higher. So again, that's the inflation story that doesn't make it easier, but that's where we're at. So there's that. Gold had a nice couple of days. We're still in a bunch of chop. I think gold can still pull back, especially if dollar's getting stronger. Gold will likely fall into like the 25, 24.50 zone. I like it all. I like 25, 24.50, and 2400. I will be looking to add more positions in there. Silver and gold still like the trades. Silver's responding nicely off the 28, almost $29 level. If it holds here, I've said this on silver. What I'd love to see on silver would be find this trend line support, come back up to this level, give us a little bullish pattern here, and then finish this move up into my target one, which is around 35.88. I love that trade to be silver. If not, there's still a lot of support back here around 26 bucks. So if silver is, pulling back and using the trend line, and we find some of this, I'll just wait for that structure and I'll add more over here. But I'm still trying to get silver up to 35.88. I'm still trying to get silver up to $45. Might take some time, but I'm pretty committed to that trade. Bitcoin, nice little run. We came back to 91.3, pulled back to the 30%. I'm not that impressed with it. We'll see what happens. I mean, this little symmetry level, high, low, this could be a flat pattern here. So I wouldn't be surprised if we have another flush lower. I've said the 90K mark. I said the, kind of 80 to 75K mark. Let's just put like 75K down here. That's my window. I'd like to buy some Bitcoin, 90K to 75K. I added collar trades on IBIT, FPTC, BITO. The nice thing is my Ethereum, which is greater than 60 bucks on EETH. If it stays there, that's full profit. Anyway, but Bitcoin going up is good. Let's see what happens. There's a pretty compelling argument like Bitcoin in 2025 will be, I think, an important asset to watch. Having this run and this, I guess it's just more conversational. Like it's certainly more accepted. It's more regulated. It's now securitized where, any average stock account, any average, ETF buyer can now have Bitcoin exposure. You don't have to have like the comp. And again, I'm not saying this is the right way to do it. I mean, if you got your enthusiasts and purists out there, they're like, not your keys, not your cheese, and never lose your password. It's like, that's a whole different side of Bitcoin. This is where financial advisors can say to their clients, like, look, having a 1% exposure in Bitcoin has helped double your portfolio over the last decade. Now, they didn't do that because nobody had exposure to Bitcoin this way. But you can now own IBIT or FBTC and have that exposure and have it be very, very small risk and overall allocation in your portfolio with the potential of this thing, doing pretty well, right? So anyway, if Bitcoin somehow has this stellar year, outperforming the broader markets and outperforming the indexes, it just kind of continues to feed into this narrative like it's a pretty amazing asset. I think that now that it's securitized, I think it is hand in hand with risk on, risk off trading. And so if we go into a risk off environment, I do not think Bitcoin is immune to risk off trading. It has shown direct correlations with money flow. It's shown direct correlations with the NASDAQ. And I'm surprised that it's actually holding up this well considering the dollar's been getting stronger and gold has been down. So gold down, Bitcoin down slightly, but dollars up. I mean, I'm curious where this goes and risk appetite. There's been a decent amount of outflows coming the last couple of weeks since the Fed especially. So we'll see what it does. I would hope there's a little bit more of a pullback, right? So if there's a little bit more of a pullback here, I could see a flat pattern, high, low, and we still flush one more time. I would like to see that area offer up some technical support and see if this trend will continue. You can look at all the moving averages here and see this dynamic level. So if we fade, into the 144, the 200, I'd like to scoop up some Bitcoin. Higher highs at this point, like nobody really knows how high we're going to go. Getting back to this high was impressive. Hitting 100K was impressive. Now what? Now it's 200K the mark. Now it's 250K the mark. I don't know. But either way, it just gets more exciting. Does this transfer into other stocks doing pretty well? Yeah, it could be. MicroStrategy at 318. Heck, I can get this one called away. When? MicroStrategy, I've got a collar on this one. I think I went out to the end of, how far did I go out on MicroStrategy? MicroStrategy, sweet. I might get Pfizer called away today for, that should be some good profit on Pfizer. Let me check. Pfizer should get called away today. If it stays above 2650, come on, where's my tracker? Pfizer gets called away for 2650. That's a decent chunk of profit. This is 24.72. Get it called away at 2650. That's $1.78 on 1,000 shares. It's about 20 grand. $19,580 today if it stays above 2650 by the close. Fingers crossed. I want Pfizer to get it called away. NVIDIA, well above my strike at 140, so maybe some income there. I was talking about MicroStrategy. I have the 305 and the 245. So if it gets called away at 305, I'm flipping this stock for about $1,400 profit. That is 1, 2, 3, 4, 5, 6 accounts. So again, another chunk of profit to kick things off this year. $1,400 times 6 accounts. I'll make $8,400 on MicroStrategy, and I've owned the shares for possibly a couple of weeks because my covered call is out to the 31st. So if I own it for 4 weeks and I make what, $8,000 or $9,000, like I'm okay with that. I am okay with that. So anyway, it's fine by me. I didn't intend to own MicroStrategy for a long time. I wanted to use options to lower my cost basis. What I like about this is I bought this thing in the Pulver Alerts at 346.90. Intentionally use options. My cost basis right now is $291.20. So I'll make $13.80 a share. I've lowered my cost basis over $50 in 2 trades. I cannot tell you how powerful option trading is other than this is a great example. I buy a highly volatile stock, okay, lower the cost basis in 2 weeks by $50 and get it called away potentially in the next 2 to 3 weeks for a nice gain. Am I going to look in hindsight and be like, oh, I should have held it? No, I'm just going to take the income and I'll probably do it again because there's so much premium in this trade. I might just keep doing it. As long as I can buy it, put on a collar trade. If it gets called away, it gets called away. But generate income each time. Like maybe that's what MicroStrategy does for me this year. It just helps me own it, protect it, own it, protect it, own it, protect it, and generate some money on it. Okay. All right. So a little bit of MicroStrategy there. Coinbase. I took out the bull call spread for profit. Now I have a 111 for income. This one should be good. I think it's January 17th. So a couple weeks out. Coinbase. Yep. So I did the monthly expiration year. It's a 220 by 210 by 200. Right now it's up $300. Max profit's 333. Let me see if I can get out of this thing for. Yeah, I mean, I can close out for most of the profit right now. Can I get out for a 25-cent mid? Nope. Can I get out for 26-cent mid? I might just take the profit today. I just got to fill for 26 cents. All right, I'm going to take the profit here. If anybody's in this Coinbase trade with me, I'm going to close closing for 25 to 30 cent debit. So I'm going to take a majority of the profit. My max profit is 333. That just closed out for 26 cents. So 333 minus 26 is 307. So I'm keeping 92.1% of the max profit. Rather than waiting another 2 weeks, then I'll just take the profit now and take the 92+% max profit. So I'm going to close this one down. I'll update that in the poll alerts as well. Okay, so that one is closed. Now it's down to 20 cents. Okay, I see you, Coinbase. See if I can just get above the mid price. 22 not filling. Let's try 23. Worst case is I'll take the 25, 26 cents debit. As long as I get over $300 per contract, I'm fine with that. All right, I'll just go 25 cents or 26 cents again. All right, 25 cents fill. Perfect. 1, 2, 3. Close out for, let's go 25 cents. Filling there. This account. 1, 2, 3. Close 25 cents. Maybe 26. Fill the 25 cents. That's good. And this one should have both right here. Here we go. And close at 25. Okay, those are closed. So that trade is done. Coinbase closing up for a profit. I'll update that in the poll alerts. I got to find it first. Coin is going to be in the stocks options trades. All right, let me search there it is. Coin closed out the bull call spread. Here it is. Jump in this. I'm updating this right now. So this trade was posted on November 14th. So I'll do a little reply to this guy. Coin trade update. Coin. The coin 111 trade. Enter for 333 credit. Closing for 25-cent debit. Net profit of what? 3.08 per contract. Okay, it's posted. Trade's done. Ethereum. Nice little rip on Ethereum. EETH, I need to stay above $60. I could probably close this out too. This one's not as liquid, but it still looks pretty good for profit. I am sitting in this one through most of these trades. EETH is up around, so I've got open positions up around $9,000. So I have most of these expiring in 2 weeks, but I want to eliminate some of the outlier risk. If I'm in majority of the profit here, so I've got 82% of the profit, 93% of the profit, I will evaluate those to see if it's worth closing. The bid ask might be a little bit wider than I want, so I might sit on it a little bit longer. I'm also willing to take an assignment. I mean, if I own the shares at $60 and put on a collar trade, it doesn't tie up a lot of capital. Like owning this ETH and protecting it, I'd be totally fine with that too. So I'm going to let this one go all the way to expiration. But if it closes out by the 17th and it's above $60, then I'm looking at $90, $100 in profit. Maybe more because I'll get more decay. Okay, gold, I did gold already. Gold, I want to see gold get to like 2,500, 2,450, 2,400. I'm looking for a pullback. High, low, lower, high, lower, low. If gold comes into this area, I'm going to scoop it up. I'm scooping it up. I'm waiting until then. I'm not interested in this chop. Whatever this is, I'm not trading it. Okay, if gold goes back to retest the highs, that's fine. I'll just ride it. But I'm adding positions to gold down here. That's where I want to be adding to positions. We have a pretty decent bar count on gold, so I'm going to wait. I want to see if we get a pullback. Okay. All right, what else? Argentina. What? Look at that freaking move. Wow. FTSE, okay, fine. DAX, looking pretty vulnerable to the downside, actually. After that to me looks like capitulation. That's capitulation. If this has any type of bear flag look to it, we could come right back into that 200 moving average. So Germany looks like it would be on the heels of a pullback. China's fine. I still wonder what China's going to do by March of 2025. What are we going to do here? Is this going to be a bullish trade? Is China going to do anything good? I just think the sentiment around China is so negative that's why I'm long, and maybe I'm stupid for doing it. But I'm doing it with controlled risk, and I have some shares, and I've got some collars and whatever. But I still like the potential. Just can anything besides the U.S. go up? I guess Argentina. But it's like I still think China has profitable companies that apparently nobody wants to trade. So I'm curious what it does. Maybe it's good, maybe it's bad. But this is what animal spirits look like. Okay, it's the potential, and so if there's any type of follow through like this push up to this pullback here, if we have any follow through, if this is an impulse, if this is an impulse wave and a pullback, and there's another impulse wave coming, well, obviously I want to be having some exposure to that because there was a ton of profit there. So anyway, I mean, I would say from last year's gains for me, I didn't take a ton of profit in September. I had like $40,000 in profit, and I think I protected about 15 of it. So I still have, some additional profits to work through. I've lowered cost basis. I'm just hanging on to the trades. But, if we get another run back up here and higher, I mean, I'm obviously going to work more profits there. So, but to be determined. I think that's going to be fairly quiet on the stimulus front. On the the narrative will be kind of non-existent. But based on that kind of technical double bottom and coming back to this level, getting back to the center high, like all these things look good. And if this is going to continue to be what could be a double bottom pattern, the true measurement is going to be double that move and take it higher. So if this is pushing up here to pull back again and then breaking this level, that's where we start to double this thing. Gets really exciting to the upside. This could take months. This could take a year or more, but I am going to continue to kind of follow this trade. All right, Mag 7 stocks. We have nope. I mean, markets are up today. What's leading? What are movers and shakers today? Nvidia. There it is, everybody. What's leading the market today? Nvidia. So Apple, Amazon, Google, Meta. I still think we have a pullback towards the 200 moving average, if not further. Microsoft. I wouldn't mind looking at a 1-1-1 trade in. I have one right here. That's a ratio spread that I've got out to February. This one is a ratio spread that I also have out here. I don't think I've closed either one of these. Let me check. Microsoft. Yep, so I've got the ratio spreads. That's a ratio spread. And that is a ratio spread. And that is a bull put spread. So all income and up around $400 with most of the profit in. I've got 14 days out to the January 17th and 49 days out to the February. So I'll keep an eye on this one, but the levels are quite a bit lower. So Microsoft would have to have a terrible Q1 for these trades to have any risk of assignment. I'd still be willing to own the shares though. Netflix, I'd like to see a bar count get hit. So a high bar count on this one on the 200 moving average. I don't necessarily want to short it right now. If we came back up to retest the highs, I may look at a short position on Netflix. May. I also closed out profit on MA and Visa. That's MasterCard and Visa. I took those trades. They were bear put spreads for $1.95. I closed one of them for $3.10, and I closed one of them for $3.75. Again, max profit would have been $5. I didn't want to wait the extra 2 weeks for the trade. I'm just taking the profit now just in case the market wants to, rally, I guess, and I didn't want to have those positions threatened. So if you took the trades with me on MA and V, those are profitable. I posted that yesterday. Okay, but Netflix, if we pull back to the highs, I'd like to fade that move. Otherwise, I'll just wait. I'll see if Netflix can, fall, and that's not awesome. Like, that's going to feel like garbage. But if we come back and fill this gap or find some dynamic support, I'm way more interested in, income trades down here on Netflix, being willing to own the shares way, way, way cheaper. But I just can't justify, other than having like a fractional ownership type thing. Like, if I want to control options, then I'm doing income trades down here. Otherwise, I'm just like, yeah, sure, just buy 100 shares, or I'm sorry, buy $100, buy $500, buy $1,000, whatever you want. Netflix at some point is, it's the king of streaming. It keeps getting better. The subscribers keep growing. The revenue is pretty solid. I think it's overextended. I think we need to have a pullback. We got a crazy high bar count, but I want to see if this falls back into a level that's more attractive. So I'll wait. Nvidia. Yeah, I mean, Nvidia is Nvidia. Are we getting a run back to the highs again? Maybe the market's all excited about something, right? Or is this a fake out to then fade? I still think the bar count's legit. It's going to get hit at some point. I think we're going to struggle to break these all-time highs without being a pop and fake. So if this comes back up here to test the high, I think that's something we could probably fade to take it back down to the bar count. Don't be surprised if Nvidia is still range bound until this 200 moving average gets hit. Just saying. So the nice thing is I own shares. I put a collar trade on. I've got a 140 by 130. I own the shares at 134 and change. I'll make $5 or $6 a share, and I can flip this thing in a couple of weeks for $500 or $600 per account. Okay, I'm fine with that. Do I want to do more on Nvidia? Yeah, maybe I'll do the exact same thing. If it gets called away at 140, I do the exact same thing. If I want to, maybe I can roll up my call and grab a little greedy profit out of it, or go by another week and grab. I mean, if we're up here to 153 and my call's at 140, maybe I can roll it out by 1 week and grab another $50 to $100. Add to the bottom line. So I'll debate on that. So Nvidia, there's my 140 by 130. If I wanted to roll this call, I don't really want to roll it without rolling the put with it. But I have some options here, so I don't have to do anything. I can still make about $600 if I roll this. I mean, if I roll it out a week and I keep the same strike price, I get $1. I mean, that adds another buck to my bottom line. I just have to go out an extra week. So as I get a little bit closer to expiration, I'll debate on that, because I can maybe, like right there, I can roll it up $1 and still get 40 cents. I can roll it up. Yeah, I mean, if I rolled it up $1 and get that's $1.40 to my bottom line. That's another $140 a contract. So there's ways to increase the profit here, even though the price is like, oh, I should hold it all the way. Nah, I'm just doing a repair, But a repair for $500 or $1,000 a time it adds up nicely. So, all right. I feel like I talked a lot today. Any other questions? Happy Friday. Enjoy the rest of your day. I think I'm good. So we covered a lot. We're just getting started. Next week, full week of trading minus Thursday with the Jimmy Carter Memorial. So market's going to be closed, but we have non-farm payroll next week. Let's take a quick peek at the calendar, and then I'll let you go for today. Let's go high impact only and medium impact. So next week, we have some services PMI out of the U.S. on Tuesday morning. We have JOLTS job openings, ADP non-farm, FOMC meeting minutes. Thursday, it shows that the news is still coming out. I don't know if the equities markets are going to, the equities market should be closed, but Forex will still be open, crypto will be open. And then Friday is the US and CAD job numbers. So the forecast is 154, unemployment at 4.2, average earnings at 0.3%. So are we going to continue to see, all sorts of wacky job numbers and prints? Maybe. Also, January 10th, aren't we going to see an inauguration next week? So does that officially start? So the Trump dictatorship 2.0 starts next week. So who knows, man? I don't know. This is going to be 2025 is going to be, it'll be a year, whatever it is. It's always interesting. It's always new. It's always a clean slate. It's always challenging. We'll figure it out. So, all right, everybody, have a good Friday. Have a great weekend. And I'll see you soon. Thanks, Nick. Thanks, team. See you soon. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.